Hello traders, Gary Wagner here. Just before 11 o'clock in Honolulu, 5 o'clock in New York on Monday, the 27th day of October 2014. And this is the daily report for gold and silver. Do have a higher Dow today, lower gold and silver, platinum, palladium are trading higher on the day. First to gold, we are trading near the lows of the day, 12.25, 12.26. It has had a low of 25.30 and a high of 12.31.40. Silver also trading lower today, currently just a little bit above $17 per ounce at $17.10, low $17.05, high $17.23, very narrow range today. More on silver in a little bit. Traders, there's absolutely no doubt, but there's a wait-and-see attitude right now as the Fed gets ready to meet with their monthly FOMC meeting, and we will have some sort of news on that on Wednesday. So we've got today and tomorrow up until Wednesday morning as people kind of try to decide what they think will come out of that. When we look at this market on a technical basis, we're looking at a daily chart of gold. There is at this point very little doubt that we're probably going to see lower pricing. I'm probably going to issue a sell signal later on today. Now, the key with this right now is where we saw this market rally to, and the close yesterday, on Friday, really came to about a 38% retracement. So it does appear as though, at least on a tentative basis, that we have broken through that. In fact, let's go ahead and pull up that retracement number. So traders, that's exactly what I've done. I've pulled up a daily chart. Now, this is in Japanese average format. You can see we're going to convert this to a standard candlestick. So you can see that we have broken through this particular price point, this being the 38% retracement level at 27.80. And really, to get the best sense for that, we want to go to a standard candlestick chart. There we go. And once we do that, you can see we've got this clear break below the 38% retracement level. I believe 12.19 is the next number. That is a 50% retracement right here. And then the 61 is at 12.11. So my sense right now is that we are probably going to see this market headed lower. It's really interesting in that it's going to be based upon what kind of information comes out on Wednesday, and whether the fact that they have now ended quantitative easing, so to speak, whether or not they come up with some sort of a stimulus package, or whether they remain on track with their basic removal of stimulus in terms of what the Fed's been doing lately. But as I said, the fact that we have broken through this particular price point right here, 27, really lends itself, at least on a technical basis, to lower pricing ahead. So it's an interesting day also in that we do have a lower pricing down around $4.90. But if we take the dollar into account, which you can see is dramatically, or not dramatically, but it's slightly lower on the day, you've got the dollar actually giving gold a $2 gain in price today, actual selling about $7, so the net is a $5 drawdown on the day. But that is in light of the fact that the dollar right now is actually being supportive of gold by about $2 on the day. Now, so in as far as the equities markets go, we did have the Dow closing higher on the day. This is the Standard & Poor's Mini, the E-mini S&P, and on that you can see it closed very, very slightly lower on the day. Standard candlestick charts, this is a daily chart. So we've got the dollar acting favorably to gold, almost a neutral effect in terms of the equities markets, but we do see gold under pressure. I'm pulling up a daily chart again, and as I said, I will probably look to initiate some sort of a short position. Of course, any breakthrough, really this 23% level here, would signal the dramatically lower prices. Now, this particular retracement, of course, is not of the most recent sell-off. The last one we looked at was simply a retracement from here and a move here. That was our 38% retracement level. We went through that. This is a retracement from the high at 1346 to the low, and as you can see, we're at different levels. 23 would be the final break below that also could signal some lower pricing. So as I said, my suggestion, we are sidelined in the market in both gold and silver, but I am looking to the short side of the market in terms of my strategy. And the key is that it's a little tricky putting it on prior to FOMC meetings being released, but my sense is that we're probably going to be looking at a lower gold throughout the week. So traders, what about silver? As I said, I am looking to implement a short position in gold either today or tomorrow. As far as silver goes, I'm going to put in this horizontal line and base it on these lows right here back from 2010. And as you can see, now let's go ahead and blow this up so we can see where this number comes in at. But as you can see, we are effectively below that point, that being at around 1720. Now, why is that important? Because that was really long-standing support, as you can see right in here. But if we break through that level of support and go back in time, the next real strong level of support comes in right here at about 1680. And then we've got one other horizontal line. We'll go ahead and blow these up and take them to the current timeline to get a better sense or a feel. But is this low right in here? And now with that in mind, we can actually look at this as a target. So my sense is this. If in fact this market breaks below 17, we don't really have any major support coming into the market till about 16. So there might be a short play here to pick up about $1 in silver. We'll have to analyze that and look at that as we figure out our strategy for this week, October 27, 2014. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for another daily update. Look for a trade alert to go out should we initiate short positions in either gold or silver. Bye-bye.